Good morning, Pathfinder community. It's Monday, March 2nd. Last week we put out our first video and got a lot of great response. Was not expecting to do our next video this quickly, but with the markets dropped last week, we thought it would be a good thing to do. The S&P dropped over 11% last week. Dow Jones and NASDAQ were both down about the same. Stocks went from overpriced to underpriced in 1 week. And unfortunately, it's right in time for statements to be coming out for the end of February. Would not blame you if you did not want to open it. On the other side of things, bonds had a tremendous rally, and they are actually quite overpriced. So it's hard to justify going to some of these safe bonds with rates so low and such a run up. For example, a 7 to 10 year Treasury is up almost 14% in 1 year when it is only paying 1.3% interest. Coronavirus is the talk of the town. It is still spreading. There is no vaccination in place yet, and we are worried about the economic impact from it. One thing we're looking at is what companies are going to be reporting. They're starting to announce impacts, but not necessarily financial data being released. We know that will not come out until early April because they only report at the end of the quarter. So be patient through the market. It very well may be that the market expects pretty bad stuff, and if it isn't as bad as the market expects, we could see a rally in April. If it is worse than expected, then this likely would continue through the next quarter, which puts us into July before we get economic data. And so be patient. Don't get caught up in any of the hot stock du jours or what you should do with your money right now. Things like chasing gold or putting things in cash or minimum volatility or defensive switches. All of those are a recipe for disaster. It's great to look back and say what you should have done, but reality is tearing up a well-crafted investment strategy in a panicking market is going to be a recipe for disaster, and you will not recover when the market does turn around. It also presupposes that you somehow can start timing the market in a time when the market is being irrational at best. And so stay invested. Remember, if you are a distribution client, we plan for these kind of markets. If you're an accumulator and you've got some cash, you may want to consider looking at opportunities that are in the market today. And if you have any questions, Pathfinder team is here for you. Thank you.